Don't tell me a couple tenths of a percent drop in inflation data when some numbers actually went up is going to cause the NASDAQ to go up 6%.
Well, I think in the near term, Sully, we both know that the algos are in charge. They run the day-to-day volatility, but they create opportunities for those of us who are long-term investors, and that gives us the opportunity to step in and buy some really great companies at depressed prices. So none of us love volatility, but there is a silver lining.
Yeah, there is. And I think the point I tried to make at the top of the show, I'm not giving advice, I'm just looking at historical data, is that like half the long-term market gains over 20 and 30 years come from being invested on just a few days, do they not? Like one or 2 days a year can double your returns over the long haul. Today's a great example of that.
No, that's true. We actually sent that chart to our clients recently as people got a little bit antsy. But I think it's important to remember, too, that, yeah, it was only a 0.2 move in core inflation, but we think we hit peak inflation in June. And if you look back historically to 1951, there's a symmetrical relationship between how long it takes for inflation to rise and then how long it takes for it to decline. So we're 4 or 5 months into the decline, and peak inflation has always been a good place to buy stocks. If you look at the average annual return after peak inflation, it's markets up 12 months later, 13.8%. If you take 2008 out, which you shouldn't, but just illustratively, that was a year when the market was down 12 months later, but it was up 21%. So it's this isn't going to go on forever.
Yep.
Every bear market's followed by a bull market.
I got some friends watching in Dallas. Gary Glanger, great race car driver, by the way. His mom, Karen, apparently is my fan. I have no idea why. Give them some stock picks. They're sitting there in Dallas. Give them some names that you like right now that they might be able to invest in.
All right. Well, the ones for his mom would be companies, old economy companies that are benefiting from the digital revolution. So a company like Public Storage, which opens 50% of their storage units without ever talking to the customer, or CBS, who now has a really robust digital presence. They increased that by 1 million last quarter to 46 million. They're making the shift. And then Honeywell, which is kind of a solution and a beneficiary from digital. That's a company that beat raised and said they're sniffing around for acquisitions. And then for the race car driver, I would say ServiceNow, Gary, a little more octane. ServiceNow, they had a fabulous quarter, and these stocks have not been trading on the fundamentals; they've been trading on the macro. And I think when the economy does slow, and we see that the Fed is going to at least pause, but maybe even ultimately begin to reduce rates again, I think these companies are going to benefit in an outsized manner. So it would be ServiceNow. We've been adding to that Amazon, Microsoft, the Palo Alto Networks, which is a stock I've been talking about on this network for over, I think, 3 or 4 years. So they're in the sweet spot of providing solutions, and that's where we want to be.
Very quickly, next most important thing you're watching, data-wise, Fed-wise, is it the meeting, Fed meeting?
I think the Fed meeting's priced in. I'm going to say for the market, that's probably the most important. We're a little bit more focused on the election, how it finally settles out. That's going to have profound implications for the lame duck and maybe potentially a lot of spending, but also benefit some of the companies we own, like defense and others, if they do get the defense bill through.
Yeah, I mean, amazingly, nothing is settled. The Senate's not settled. There's still hundreds.